Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. Well, today we have had some very interesting price action. Gold surged to new highs for the year and reversed on the day. The US dollar surged to new highs for the year and did a slight reversal on the day. And the S&P 500 started the day down. The futures were down and came back to rally. So we have had a day of erratic swings and erratic type of price action. So we're going to look at what exactly the markets are saying, because this is when we have this volatility, it shows that there's a lot of uncertainty out there in the markets, and we will break it down here. Okay, so in front of us is a chart of the S&P 500, and as you can see, the market is near the high of the day. And what you saw, that move down is called a candle. This is a candle for those of you who are not. It's not coming up. Okay, so those of you who are new to charting, and the market was down on the day. So earlier the market was down, and what we saw was a reversal. If I do the hourly charts, you see that the market opened down, and then the market rallied towards the end of the day. The trading has not finished for the day so far, but the market is still up as I speak. And the Dow is up at 43, the Nasdaq at 21, and the S&P 500 is up 2 points on the day. Now we still need for the S&P 500 to break this series of lower lows and lower highs. Market came down, went up, made a new low. Look on this low, was lower than this low and lower than this high, lower than this high, lower than this high. And the market is trying to break above these levels. So to kind of let the selling pressure go down, we need to close above this level on the S&P 500. If as long as the market remains below this 2450 on the futures, we could see renewed selling pressure. And if we do close below this 2420, 2410 region and 2400, that will be very bearish for the markets, and that will actually signal that there is a longer term pullback or correction happening in the market. Dow Jones Industrial Average, looking at the Dow, we see similar style of price action. Market closed down, and the market really gapped down on that news about North Korea. And yes, there are times when news do affect what the market were doing. And we saw late in the evening yesterday, the news came out about North Korea firing a test missile above, and it went over Japan. And that's what caused this initial spike down in the Dow, the S&P 500, and the Nasdaq. Since then, the market has recovered to this 2184 level, 21,840 level on the Dow futures. So what's in store for the Dow? Similar situation to the S&P 500, where we saw the market spike down, and if the market closes below this 21,600, then that will be bearish for this market, and it will indicate that there is more selling to come with the Dow. So Dow is very shaky at this point in time. Looking at the US dollar index, remember I said yesterday that the market will challenge this low. Let me just bring it out on the weekly chart. And every time the market comes, this US dollar in mid-2015, and now mid-2015, mid-2016, and now again the market is coming to this level. And we see this is acting as support in the US dollar. For the dollar bears to really gain momentum, the market will have to close below this 92 level. Market tested below the 92 level, trading down to 91.60. Then we saw a rally in the value of the dollar. And this was the price action today. Dollar really sunk on that news about the missile firing in Japan, or North Korea firing that missile over Japan. Market sunk and has rallied again. But we still need to pay attention because the dollar is under extreme pressure. The dollar could still slip below this 92 level and close below that level. And with the weakness in the dollar, we also saw gold surge to new highs. So this is a new high or a new low for the dollar for the year. This is the beginning of the year. The dollar is 2017. The dollar was here. And this is the lowest point on the dollar for the year. Similar situation with gold. Gold surged. Let me just clean up this chart. This is the consolidation that we have been seeing in gold. And gold is looking like it's breaking out of that consolidation and surge above the $1,300 level between yesterday and today. I remember I was speaking about the importance of that $1,300 level, because every time the market would hit 1,300 in April this year, in June of this year, and then earlier in August, the market hit the 1,300 level and immediately sold off. Well, the sell-off in April was bigger, was fairly large. The one in June was large. The one in August was essentially, it was small. And then we saw the market close above the 1,300 level. So this is an area we are going to keep an eye out on in gold. And even though we have reversed on the day, this is still very positive for gold. And if we can close out the week above 1,300, that will be very bullish for this gold market and will signal to me that we could be seeing further gains. Now, just because I said we could be seeing further gains, that does not mean the market will go straight up from here. That's not how markets work. Sometimes you could get a pullback and then an up move. And the pullback, these pullback normally acts as it's essentially faking out the weak longs, the folks who are not very committed to their buys. And then when they sell, the market then rallies without them. So this is just very bullish, but it doesn't mean the market will go straight up from here. Markets don't normally just go straight up. It normally moves in steps. Moves in steps like that. And that's how bull markets develop themselves. But positive price action here in gold. What is not so positive is the reversal we have seen on the day. Because the market, upon hitting 1330, reversed fairly strongly. So this is something, again, we are going to be keeping an eye out on. This whole gold sector. I remember I did a video on a number of gold stocks. I believe it was 2 weeks ago. And you can refer to that video on the health of some of the stocks in gold that we're speaking about. So we have essentially been watching this move in gold over the last couple of months, and to make money in these markets, you have to plan beforehand and not just react to what's happening. Taking a look at the crude oil market, and we're also going to revisit the price action in Amazon. We spoke about it last week with the takeover of Whole Foods. Okay, so crude oil was down on the day. Again, this market is it's moving sideways. I mean, slightly negative, but there's not much price action movement here in the gold market. Another market that reversed strongly was the Japanese yen. We saw the Japanese yen hit resistance in this 92 level and has sold off fairly sharply. And as you can see here, there's a lot of indecision here with the Japanese yen. A lot of indecision, and that is directly related to the fact that stocks aren't really moving in any direction, because uh, anytime we see the stock market looks like it's going to sell off, we see the yen gaining. And as the stock market reverse course, we saw the yen lose some ground. So this is obviously uh, acting as a safe haven play, and it's something that we are going to keep an eye out on. Looking at Amazon, stock of Amazon, amazing. Looking at the stock of Amazon, good run in Amazon. Market has hit support and is trading above support. I said yesterday, or not yesterday, last week, that if we slip below this 950, 940 area, then that it will prompt me to take some profits on Amazon. But we are seeing the market gain some support and is trading up nicely at this point in time. Let's look at Whole Foods. This is after the takeover of Amazon, or from Amazon. We saw the buyout. The market is still trading in a very narrow range. I guess traders are looking for more information here. Market is in a very narrow range, and nothing much is happening with the value of Amazon. But the main story today is the fact that S&P 500 is cannot decide where to go. The US dollar cannot decide where to go, and gold looks to be creeping to the upside. Just a word of caution, that gold position has to be managed properly and has to be managed carefully, because we're at a stage that we're not in a full-blown bull market in gold. We're in the beginning stages of a bullish move in gold. And at the beginning stages of these moves, what you can have is very erratic price action, and that volatility can really affect traders and affect your profits. So just bear that in mind. Okay, that's essentially what we have for you today. Remember to subscribe to the channel. The channel is here for you guys to highlight profitable opportunities that's happening in the markets. We don't do a lot of theories. We look at markets that are trending, markets that are moving, and highlight them for you so that you can make better investment decisions. I am Beyond Dale. Thank you very much for listening. I hope you have a wonderful day.